What a week we've had! Oh my word! What can I say? FRC latest three-letter acronym in the crosshairs this morning. This morning, U.S. markets have just opened, unsurprisingly, lower. FRC, First Republic Bank. Let me just show you their. Let me show you their chart. They were down 20 odd percent. Hang on, where am I going? There we are. There we are. I'm still here. This First Republic up at 172 here. Where's this? This is August last summer. Everything was fine and dandy. We drifted into the year end. We went sideways for into that year end. Rallied with the market in January. It was weaker in February under its 20-day moving average, and just what has happened the last few days. Crisis is probably not too strong a word to put on it. When a bank like Credit Suisse comes under question, it's been pushed into its situation, obviously because of what's been going on in these mid-range tech-friendly, crypto-friendly banks. Obviously, you had SVB going bust last weekend. It's filed for bankruptcy today before the markets open. Markets are opened lower. This FRC hasn't started trading yet, but it was down at $27 again, another 20% down on the open. But what a week that stock has had. So let's have a look. First up is Emma. Good afternoon, Emma. Good morning. I don't know where you are. Where are you, Emma, in the world? Is it evening? Is it lunchtime? Is it breakfast time? Let me know. S&P 500, US 30 on the 4 hours. So let's have a look at these babies. That's the Dow on the 5 minute. That's obviously not what you're interested in. But if we go to the 4 hour here, this is the Dow. So Dow down for this period here. Let's zoom it up a wee bit. Obviously, let's put in some properties. Short period. So here we are, at the beginning of the week. We've been under our 21 EMA, very simple moving average on here, Emma. We've had a big rally yesterday. The Dow was the weakest of the three major indices. It was up 1.17%, but we had a big up candle here yesterday into close, and we held it, and now we've turned it around. So it's topped there today at 32,263 on this little setup. Clean chart I've got today. I'm going to use white charts today. It's White Chart Friday. So it's topped the 4 hour there. As you can see, big resistance. 1, 2, 3, 4, 5 candles. Can't get above 32,268. And currently a big down candle. So looking to take that back short. But as you can see, generally the trend has been lower anyway for obviously this week. Last week and this week. So the floor here on an end of candle basis, which is the important thing, obviously the wick takes us lower, took us to 31,600, 31,598. So 31,600 is your low there on the end of that 4 hour candle, Emma. Oh, Emma's actually saying she prefers the black charts. That's funny. Please can you use the black background? Certainly, as you're first up and you've asked, let me go back to my black charts then. Okay. As you've asked so nicely, of course. I'm not going to swap between white and black because I need to keep changing the lines, okay? But good afternoon, everyone. Where's my black charts? Where's indexes? Index is probably the best one. There we are. What are we doing? The Dow on where's my Dow? They're all white on there, so let me go. You go back to my default. Right, my default setting. So these guys are the moving average ones, trend following. The blue line is the 50-period moving average. The golden line is the 200-period moving average. The magenta line is the 21. And the ones we're trading, we trade off on these intraday timeframes is the 5 and the 9, the crossing scenario. But let's have a look at the Dow US 34 Emma. There we go. Black background, Emma. Hope you're happy now. So there's that 50-day. We just talked about 32,200. There's the 50-period moving average. We couldn't get into it. We've rallied big, strong one yesterday, and then we've just gone sideways, small candles during the Asian session, and then a big down candle at the moment. There's our 31,500. support at the end of the wicks. And as we said on that white chart, this is we're not going to be able to see this now. We can still see it. 31,500. So 31,600 is the end of the candle low here, and then 31,450. 31,450 that wick low from earlier in the week. So it's been a bad week. So we need to break this range there. 4-hour traders, we've got to get back over the 50 period moving average. We had a go yesterday. We couldn't break it, 32,290. And then the floor's down here. So it looks that's looking like it's going into decline. Your other comment was the S&P 500, the most important stock market in the world, ladies and gentlemen, the S&P 500. I hope you've had an interesting week, to say the least. Where's my S&P 500 gone? There it is. S&P 500 futures. It's opened. It's currently down 0.36 of 1%, 14 points at 3946. 3946 is where the cash market closes. The futures are a tad higher at 3981. But we are generally running out of steam at the 4,000 level. So just like we saw on the Dow, we've hit a key resistance area, big up candle again, over the 50 period moving average this time. So it was looking very robust yesterday. Stalled here at the 4,000 levels for 1, 2, 3, 4 candles. A wick pushed higher, but again, you can see how key the 4,000 level was here on these 4-hour charts. Earlier in the month here, as those candles there really stuck there at that 4,000 level. So down candle currently. A breach of this today going into the weekend will be positive. Next resistance is at 200 period at 4038 Emma, 4038 to the upside. Support sits down here at 3950, and that's where we're getting this coalescing of the 21 EMA and the 50 EMA. That's technically relatively positive, the 21 crossing the 50 at the moment because of this big up candle. It's delayed because of this obviously big up candle here. But your big fat support is there at 3900 on the S&P 500. Have a great weekend and have a great trading Friday. Good afternoon from BO. Good afternoon from BO. BO. I should know where that is, Neo Reps. Tell me where you are, my friend. Black charts are on. Kevin from Nigeria, good afternoon. Hope, good afternoon. Anything you want to have a look at, my friends? Let me know. We're here to help. Cruise World Channel, that's a great handle. Cruise World Channel. I hate cruises. I'm sorry, my friend, but good afternoon to you. It's not something I've ever done. It's one of those things you get quite bigoted about, isn't it? I've never actually done a cruise. I don't find it attractive at all. My wife doesn't find it attractive at all. Nobody in our family finds it attractive, but I'm sure lots of people love it. But it's not my bag. Kampala, Christopher, good afternoon to Christopher in Kampala. Why can't I see Christopher? There he is. Good afternoon, Kampala. How are things down there today? Are you trading? Let me know. What tools are you using, says Hope. There's a lot of stuff on here, Hope. You don't necessarily need to use all this. Let me just go through it all again. One of my key favorite indicators, this one right down at the bottom. It's called you can't see it, can you? If I hide your question, Hope, you can see it. This one here, this is the ATR, the average true range. I'm going to be doing a webinar on the ATR as well as some other oscillators on Tuesday. So join me for that. But the ATR, in a nutshell, is an absolute indicator. It just tells you exactly what the candles are doing. So what this is telling me here, it's telling me, because it's set at 14, so it's counting back 14 candles. Again, it doesn't matter what time frame it is, but over the average move of this particular chart, the USA 500, has been 36 points. Can you see that? I don't know if you can. It's a really small number. 36 points is the average amount of movement, either up or down. It doesn't matter. But that's the average move, absolute move that the S&P 500 has taken over the last 14 candles in the 4-hour time frame. If we change this to the daily time frame, you can see the same count back period is much higher. It's 75.82. Can you see that? 75.82. And that's, again, it's a great demonstration of how indicators are the same regardless of the time frame. If that makes sense. It's all about the math. So it's all about the time frame that you're trading, about how far this thing should move. So on average, each of these candles is moving 36 points. So what does that tell me? Well, How far has it already moved? Now, are we going to get another 36 points? The big issue with this particular candle setup at the moment is the fact that 4,000 level has proved resistance. However, during the period of the construction of the current candle, as you can see, which started at 12 o'clock, so there's still 20 minutes to go before this closes. The price has been all the way down here at 3,955. So on this little uptrend we've had, this could be. Anybody know what sort of candle that is may end up looking like in 20 minutes? We'll come back at the top of the hour, see if it's complete, and I'll leave that question out there. What candle formation? If this closes like it is, this candle closes just like that, like it looks like that now. Let's assume we close at this price. What candle? How would we describe that candle? Okay, we'll come back to that later on. So there we go. Who was asking? That was that's my ATR. The RSI is set at 7. MACD is also on there. Less for indication, but again, it's a trend following. Good for trends. The MACD, the signal line there has crossed over 0, so that's positive. The histograms are quite large and growing, so it's still relatively positive, the MACD there. The other key things on there, as I say, I've got this is the crossing, a trend following analysis. Who asked the question? It was Mike. It was Hope, wasn't it? It's a trend following analysis. So here, that's the first indicator that we might want to take this particular chart long, it went short there. This is looking like it's long. And then the next, because the blue line has crossed over the yellow line, and then the next trigger would be a close of a candle above the magenta line, which it did when it gapped up. So that was also positive. So that would have been an entry there. So this particular chart would have entered there at 3,940 on this particular strategy, declined for 3 candles, and a big up candle, and it's rallied to that 4,000 level. So you could have had your target out 4,000 because it's a big fat round number. You could have used the multiple of the ATR, and that's what many people do. So as we entered, Hope and everybody else here on that at that time frame there at 3,940, you can see the pink line. The ATR at that time was, so we go down to our ATR and we see it. Can you see there? It says, you can't because my head's in the way. But trust me, the ATR number there says, it says 36.25. So one ATR from our entry here would take us to 30. What did we say? It was 36.25. Takes us about 36, about there. So we would have got 1 times the ATR in 2 or 3 candles pot. If we'd gone for 2 times the ATR, which many people do, we'd be looking for a target there. It takes us above the 4,000. Okay. So again, different ways of trading it. Your stop loss would have been down here at the turn. Your stop loss would probably be down here now. I don't know, probably halfway through that candle now as it's gone up. If you're scrolling it up, but yeah, different ways of trading. Hope different time frames. It's all about trading. Is all about finding the time frame that works for you. Assets, candles, they all move in trends. They all move in consolidations. It doesn't matter what the asset is, but understand yourself first and foremost. Okay. Person turquoise waving. Shabab, hello. I don't understand what that means. Good afternoon, South Africa. You're moving into winter time, aren't you? Although it's still very nice down there. Whereabouts, Cortez? Whereabouts are you in South Africa? It's a huge, huge country. Do let me know. I know it quite well. Been a few times. Anything you want to trade? Anything you want to have a look at on the charts? Let me know. Kevin, what's the best robot for printing money as a scalping strategy? That's very, very lazy, Kevin. Learn to do this, my friend. With that, with all due respect, Kevin, with that mentality and that approach, you're going to get ripped off. Somebody's going to scam you, my friend. Why does it have to be a scalping strategy? Printing money. I mean, the words you use are not great, my friend. Learn to do this. I don't know how old you are. Your picture looks relatively young. Once you understand yourself in the trading environment, it's a skill that you've got for the rest of your life, and you can dip in and out of it as and when you want to. Okay, there's no shortcuts. It's hard work. It's understanding yourself. It's a management of your emotions, your ego, your personality, and accepting losing and keeping the losing trades small and manageable that don't keep you awake at night. and most people can't deal with it because they think wrong. As I said on Wednesday, my favourite trading book of 2022 is this one by a guy called Tom Hugard, who was he worked at JP Morgan. He was a chief market analyst and very well regarded in the City of London. Danish guy. He read Liar's Poker in Denmark. He's a native of Denmark, and he wanted to work in the financial markets, and he saved up, and he did, and he got to London, and he benefited from the crash of the pound in 1992. Anyway, read the book. It's all about mindset, stuff I talk about all the time and always have, and just Tom's managed to put it down very eloquently, very easy to read. It's only 300 pages, but it's broken down really nicely. Brilliant book. My favourite trading book of 2022. Have a look at it. Get it if you can. Best Loser Wins by Tom Hugard. There he is. Nice guy. TraderTom.com is his website. Follow him there. But anyway. So learn to do this yourself, Kevin, would be my comment. Neo Reps, hello. Will this help us reach new high in gold? Well, you're absolutely right. The panic, Neo, that's a great question, my friend. The panic, the uncertainty always benefits gold. It hasn't. Gold hasn't performed as well as we might have expected, given the war in Ukraine, the hideous, tragic war, the Russians in Putin's army invading a sovereign nation next door. Their brothers in arms, as they call them. But a lot of that now, looking back, was probably because the Russians and the Ukrainians were probably selling gold to fund their war. But anyway, the trend remains very much set here. We've had a strong rally for gold during November, just like we had a strong decline in February. So as a trend following trader, this was very weak during February. Thank you very much. We went down from where we are now, 1950, all the way into the 200-day moving average there at 1805. Couldn't get to 1800. Was going sideways. Looked like it was moving up. Didn't look like it was going to move down there. Here, the big down candle there looked like that was, it was screaming that it was going to go down, and then reverse very quickly over the last few days as this chaos in the banking sector has rippled out around the world. So big up day was Friday. It was the 10th, last Friday, and the rest is history. So broken through. But again, if you were just following the rules, you would have been short here, got out there of your short position, looked to go long there, got stopped out the next day, but then gone long again here. So that was a losing trade, then gone long here and more than compensated. So you have big money to the upside, big money to the downside, and a short losing and a long one losing trade there. So big, nice downtrend, losing, reversed out, stop trade there, and then big pips to the upside. So at 1950, big psychological number. Can we breach that? Can we close above that as we go towards the end of the week? A lot of it will obviously depend on the news. A massive week behind us and a massive week ahead as well. Neo Reps, myself. Remember, we've got the Fed on Wednesday. We've got the Bank of England on Thursday. We've got the Swiss National Bank on Thursday as well. Lots going on. People's Bank of China with their rate announcement on Monday as well. Kick things off. All sorts going on next week. Zion saying he prefers white charts, right? Well, should we go back to the white charts? That's somebody that actually asked. Let's go back to the white charts. I don't know what. Trading the open. Go back to the white charts. There we go. Zion, please, which pairs are you analysing? Cruise, man, sorry, I'm saying man. It's up to you. You put your question in and I'll have a look at it. I'll talk about anything because the analysis is always the same for me. Is it in a trend? Is it not in a trend? Is it above its 21 exponential moving average? Whether we're looking at 5-minute charts or 4-hour charts like we have here, the analysis is the same. The size of the candle body is very important. The wick on the candle always gives you rejection. The size of the body of the candle always gives you direction, but not always. Here it worked out. Here big down candle, it worked out. We've gone down, another big down candle, it worked out. Here a big down candle didn't work out, did it? Yeah. 2 big down candles didn't work out because we found the floor. Big up candle hasn't worked out so far, and currently a big down candle. So nothing works all the time, but it's because we're bouncing between ranges. And here we are on the 5-minute chart for the same asset, but the rules are still the same, aren't they? Big down candle, it followed through. Big down candle didn't follow through. It's bounced. And it's worried what's happened. Well, it's got to 32,000. And that's where we are now, 32, exactly on 32,000. We got to 32,300. But here is 5-minute traders, guys. Look at this. Look at this. 5-minute trades. You can see it doesn't work. It can't. Big up one, big down one. Big up one, big down one. Wicks, again, remember what I said about Wicks giving the rejection. So 32,070 is currently on the 5-minute time frame on this USA 30 chart is the key resistance. It then broke under the 21 EMA quite significantly and tried to move down, but it hasn't happened. So we've had a rally up. Looks like we're perhaps edging lower. Lots of volume. Obviously, this is the volume spiking as the actual cash markets open. Remember, this is there you go. That's the problem when you change white background, white background for the black background for a white background. The slide. So there's our open 15:30 today. Remember, we've got another week of the markets opening at 15:30 server time before we change our clocks here in Europe. So it was up for the first 5. Then so there we go. So the first 15 minutes or the first 20 minutes has been negative. So that's negative. The first 15 minutes, though, has held above the 21 EMA. So that is relatively positive. So it's a mixed message if you're going to be trading that sort of levels. But anyway, there we go. This is the Dow. So you guys let me know what you want to have a look at. Sana, good afternoon. Hope you're well. Hope your daughter's doing well. And give my regards to Adnan. Hope he's okay. Hope, excuse me, what are Tigos? You mean ER? Do you mean? Sorry, Hope. Are you completely new? I'm not quite sure what you mean by that. Do you actually mean Tigo? I don't know what you mean, Hope. Ask another question. Do you mean EMAs? EMAs? I'll stick another question down the bottom, Hope, and I'll because there's lots of questions flying in now. So hope you get that. All right, and just see your next question about blue and yellow lines. Sorry, the blue. It's an exponential moving average. Sorry, let's do these questions in order. So, on the black chart, you're talking about Hope, weren't you? So on the black chart, the blue line is the 5-period EMA, exponential moving average. The red line is the 21, and the yellow line is the 9-period. So there's 3 moving averages. A fast one, the 5, a medium one, the 9, and a slow one, the 21. Watch our webinar. If you don't know what moving averages are, watch our webinars on moving averages. On this particular chart, Hope, this is just I've simplified it here, but this is one of my key of all the moving averages. This one is the one, if it's under it, I'm looking to go short. If I'm above it, I'd be looking to go long. Okay, and this is the 21. If you can see that, if you can see the properties of moving average, there we are. The 21 exponential moving average. It's different. Okay. So it's different. You can set the simple exponential. For trading intraday at these short time frames, these 5-minute time frames, I always use the exponential moving average. Okay. So anyway, more on that later on. I don't know. 4 candles. I don't know what that means. Your analysis on gold time frame. Well, what time frame do you want to have a look on? The one we had before on the black chart, Tiago, Tulungagang, was daily. On this chart, it's the 5-minute. So these are 5-minute candles here, and you can see it's had a strong day. This is the beginning of the day here, beginning of St. Patrick's Day, 17th of March. Rallied, consolidated, juggling about, and there we've been over our 21 EMA there. So there's that consolidation. And this is when moving averages don't help you, when the market's consolidating and going sideways. But, we've trended, we've broken out of that range. That's the other thing, that's what you would look at. So that was the range through there, and there's the big candle. If you didn't get in before then, you would have had that line I've just put on there at 1933. I think that is, isn't it? 1933. because we couldn't break above that really. Or actually, just put it up there. So 1930. There's a big up candle. It's above the 21 EMA, so that's worth an entry just on that. Volume was picking up as well. The floor was really. So I've got too many lines on here now, but the floor today was sort of down there at 1927.75, and we were going sideways. So I was out because of the moving average was flat. I need the moving average to be an angle, and a bit of gap between the price action and the moving average. That's positive. That's messy. That looked okay. I would have been stopped out there on that one as it's come back there. That's gone long. Consolidated, leg up, consolidated, leg up, consolidate, come back. Big wick, careful, but that's still moving up. And it's obviously ran to a 1950. It's a big round number, and it's struggling now. It's sort of ran out of energy. First rally was clean, a wick. Interestingly, though, the next candle was higher, so it's still having a go. But can it continue? Gold is bid there on that from the open. Not the open. So there's the you can tell by the open, but as the volume ticks up, there's there's the open just before we started talking, wasn't it? There we are. The 1530 big volume, further interesting higher volume. See that big volume, the higher volume there as well has coincided with this. Actually, it's profit taken, I would guess, on people get as it got to 1950. So they're testing it now. Can it break 1950? Can it hold? And it's struggling at the moment. We're trading at 1949.30. So people are perhaps taking out their profit from that nice big long up run and thinks, there we go, my Friday's over. I've had a nice run. Thanks very much. That's where we go. That's gold, Thiago, on that 5-minute time frame. Please, what's the name of the indicator? The lines, Hope, are moving averages. Okay, the indicator down here, this is fast moving stochastic, or not so fast moving stochastic. This one here, and it's set at 10, 6, and 3 on this particular setting. So when we're up here with the stochastic, you might want to be looking at it's running out of steam. When it breaks back out of the overbought zone at the 80 level, comes back from the overbought zone down, that's when it might move down, and it has. But as you can see, it's been in this overbought zone, and it's the problem with oscillators. When you've got a strong trend, the trend is sort of wiped out any indicator you get with the stochastic. The stochastic is one of the faster moving oscillators, so you get a lot of false moves or failed moves or failed indications. So that was going down, then it turned around, and now it's moving back up as far as the oscillator is concerned. Volumes have cooled down from the open. That's the opening candle, so big opening volumes. They've cooled down a wee bit. But now, as you can see, we're just breaching and having a go at 50 over 195 again. So again, if you were trading this, stop loss would be round about there now, 1947. I'd leave it there for now. Although it's 1, 2, 3, 4, 5 candles behind. That's our recent low, isn't it? That sort of level. Might move it up, but don't get too greedy. Don't get too close. Stop you out on a bit of volatility, and that's the 210. That's the 2 5-minute downs there, isn't it? So you'd have your stop loss. Currently, I'd have my stop loss there at 1947.10, and just see how we get on basically from there. So gold remains bid to the upside. Who was that last question? Name of the indicator. Cameroon. Bonsoir. Good afternoon, Hope. Are you a French speaker or an English speaker in Cameroon? Never been to the Cameroon. Moving average. Right, very good. Normal moving average, EMA or SMA. On the shorter time frames, I always use the EMA, Tulangu, simply because they react more quickly. The maths on them have more. They are more significant in the the more recent candles. Okay, the simple moving average, the SMA, just gives equal weight to the every single candle. Whereas the EMA is just the maths is a little bit different, and it gives more weighting to the more recent EMA. There we go. We're having a nice breakout. So we've stuck at 1950. Now we're having a good go up to the upside. We got to 1954, and it's still moving higher. The gold market. Good afternoon, Victor from Nigeria. Again, a huge country. Whereabouts in Nigeria are you, Victor? I've been to Nigeria many times. Have a nice weekend. Anything you want to have a look at, let me know. X1 Bet. Good afternoon. Good afternoon. X1 Bet, is it gold? Yes, this is the gold chart. And it's bid. There we go. So that's the 5-minute chart, obviously. But it's bid on across all levels today. It's been strong. So the 15-minute chart is even steeper. You would argue that's a bit too steep. Look how sort of more or less parabolic it's got. It's a long way from its moving average. There's a lot of air there. There's a lot of space there, but you can see they consolidated for a while, didn't it? Yesterday, this morning, I should say, before the big breakout on the same candle. That's the one we showed on the 5-minute, but a big breakout and it's rallied. And as a trend follower, you just trail your stop loss up behind. Don't let it get too close. But if it whipsaws back against you, it takes you out. Don't get too uptight. That's what happens sometimes. But the trend there on that 15-minute is set. The 30-minute will be just as aggressive. There we are. 1, 2, 3, 4 big bold, or 5 big bold green candles on the 30-minute time frame. The 1 hour time frame, I presume but again, you see you're going back, bigger candles, bigger targets. The breakout was on the same sort of candle. You might have waited till the following hour, but it's breaking higher. We're at I don't know what, I've 6-week highs, I think, the gold market now, and off we go. 4 hour, again, remember what I said about size matters. Big, huge up candle here. This one here, as you can see, from the 15th at lunchtime, the 4 o'clock candle. Then it consolidated a wee bit, just like we'd had this big run up, consolidate, not surprising. Retrace, nearly half of that gain, but it held it. Still way from our 21 EMA, moving average. And then finally, here on this candle here, see how we broke the close of the candle was above the close of this big candle. Before that, we just had wicks testing higher. And then that wick test up there to 1936 from the 15th was finally broken today, just now, during this candle here, the 12 till, the one that's just completed. Big up candle again. Big up candle, retrace, consolidation, tick up, another big breakout. So 1950, can we hold it into the close of Friday? We shall see. But as you can see, the stochastic is saying we're overbought again here in the 4 hours. So the trend on all these charts, all these time frames we looked at on this gold market is to the upside, isn't it? Having had here up right up on the daily time frame. Obviously, as a 5-minute trader, you're not interested really in what the daily time frame is doing. But coincidentally, the daily time frame is also up, isn't it? And what a week we've had from this test down here at the end of February here into 1805 we went down to. Here, end of day on this chart, 1810 was our low. And then bang, what a week or so we've had. So gold is very much bid on the uncertainty. Obviously, it can come down just as quickly as it goes up. But, the whole point of using moving averages and trend following analysis is that you are on the right side of the move. And so here, up on the daily time frame, you can see what a resistance area this 1950 is. So it's a big resistance area. Can we hold it today? That's obviously the big question. Now, if we go up even higher to the weekly time frame, so from a week 2022, when gold, as I say, many people thought gold would have benefited from the unfortunate tragic war, as it did as the news broke there at the end of February, went all the way up to 2070, didn't we? But the rest of the year, it just collapsed as the dollar rallied and ramped up. Big turnaround here at the beginning of November, and we haven't really looked back from there. Big rally to that 19 retrace, and then another here. Obviously, it's a big, strong week at the moment, and it's probably going to finish, unless there's a major turnaround, a very, very positive week for gold with just today to go. So, gold remains bid across all those charts. And the next question, unfortunately, says Jeffrey's short. We have a recap. I have sells on 1920. I mean, you've got a sell. You've got a buy when it gets to 19 or 29. you've got a sell order sat there, or you're short from 1920. Jeffrey, that's again, unless you've got a huge account, that should have been closed out, my friend, because that's a long, long way away from where we are now. You'll be very much in the red on that one. So 1929 is all the way down here. Understand why you might have gone short earlier in the week, or even earlier today, to be honest. But that hasn't worked out, and it was the big turnaround was the 1 o'clock candle today, and it's gone up. So I don't know what time frame you're on. I mean, it could easily come back to it, Jeffrey. Don't get me wrong, because it was a resistance level. I can understand that 1930, but the candles proved otherwise, and it's burst up. So hopefully you haven't actually got an open trade with a sell position at 1929. Otherwise, you're very much out of the money. And look, if 1920, you're at least 1-2% against the trend, and very much there you go, 2,240 points out of the money. That will be hurting if it's an open sell trade. Hope, good. I hope that's it. Go and watch the educational webinars, Hope, and contact me say on either on Facebook or on Twitter, and I'm happy to help. Okay. Cruise World, what are you saying? Please, can you look at pound? I see a long position. Yeah, pound has been. I'll leave these white charts on for now. I've got quite used to them, to be honest. Let me just open a file, new chart. I'll use this. I'll use that same template. Shall I call the opening? What do I call it? I call it the opening. Where's it gone? The opening hour template. Here on the 1 hour time frame. So again, Cruise World, I don't know what time frame you're looking at, but the last break higher was yesterday. So we trended low, flat. There was here on as a 1 hour trader, that looked okay to enter, having been short, so that would have stopped out. At that point, it's a bit too. I mean, that could have continued flat. It's only when we get a couple of hours later that really is a more stronger entry. We're significantly above the 20 EMA. Was that at all? What was that? But again, the volume was up there, so that was just pre. Yeah, that was the opening hourly candle, so it was positive, and an hour later it was still positive. So that and a big volume, but from a candle perspective, that was the strong one here at 5 o'clock yesterday, where we broke and held this previous resistance level there with those two candles there, where we'd been down, we'd retraced, and then we'd broken above that. So that would have been enough to get you in. Flat into close, whether you'd held that overnight or not, if you got in there, you'd have been out of the mud. And then today we broke. That's another another positive candle was here this morning, as this broke to above yesterday's high. So yesterday's high was sort of around here, but the end of the candle, so there 121.27. But the end of the candles were there. So here at 4 o'clock this morning, that would have triggered long again. And it's been up, next retrace, but the 21 EMA has held, hasn't it? So although we came down close to our entry again, and again, if you'd been trailing your stop loss up and it had been here, you'd have probably been taken out for on this candle here as it's retraced quite significantly, or during this candle, if you'd been trailing your stop loss up from our entry here on that candle, you probably would have still had it there. So you would have still made some profit on that, but not as much as perhaps you would have. It looks like on the up candle, but again, that's if you'd been using the 21 EMA, you would have perhaps got stopped out there as it spiked to it, but the candle hasn't closed below it, so you might have still, again, depending on your approach, you would have still been in it, and now we've legged up again. But there's a gap here, which I don't like on Forex market charts, and there's no reason why it's that. I don't understand why that's gapped there. Why is that gap there? Or something come out? No, there wasn't anything up for it. I don't understand that. There's a miss. That looks like a fault to me on the actual chart. But that's a bias to the upside. Perhaps not massively on that 1 hour time frame. But again, Cruise World depends on your time frame. If we go back down to the 5 minute chart, again that's trending lower, sideways, not flat, and that's again looking at what we were saying before. That would have got me in. I would have got out there, and that would have got me back in. It's gaps for some reason. Those gaps can be filled, so be careful. I don't know what's caused that sudden jump in pound dollar. There's been there's no news up for it, unless there has been. There's news flows obviously all the time, but yeah, something's caused that, which I'm not aware of at the moment. But there we go. Gold, Aussie. I hope I'll go back to gold, but gold is positive. Don't fight the trend. There we are, over 1950. It's bid. Merg up. I hope you're with us. Before we did a lot of gold analysis earlier. So it's bid there from a 5-minute chart to a 30-minute chart to the 1-minute chart to the 1 hour chart, the 4-hour chart. Big candle on that close out 4-hour time frame. The 1 hour time frame broke out of this range earlier today. The 30-minute there broke out of that range on this candle here at whatever time that was this morning or earlier today. That was 1 o'clock. There we are. See, consolidated, break higher over that 1335, above the 1930 level. 1935, and then just continued to rally higher. Many would have bagged their profits at 1950. It's a big round number. Others are sitting in there as it's going up, depending on your time frame. It remains bid. It's bid, Mogadishu, my friend, gold, as you can just see there. I am worried. I don't know if got me too as well. I don't know if you've got a short waiting to be hit at 1929, or you're actually short and hurting. But again, guys, sorry to labour this, but you've got to have a system. You've got to accept that. Oh, I was looking. It looked like it could have gone short at 1929. It didn't. I was wrong. I'll accept my stop loss, and I'm out. Okay, and that's the key thing. You've got to keep your losses small. Otherwise, you're living in hope, and you do not trade in hope. It's something I mention a lot, and people look at me when I do seminars. Like, oh, what do you call it? Yeah, when you're trading, let me just bring my ugly mug up. When you're trading, get rid of hope. Don't trade in hope. You don't open a trade and hope it's going to win, or you hope you don't going to lose. There's only two outcomes, isn't to a trade? You win or you lose, and just accept it. The winners are a little bit bigger than your losing trades. You end up making money at the end of the session, the end of the day, the end of the month. If your losing trades are bigger than your winning trades, you end up losing money. It's as simple as that. And that's what the vast majority of traders do. They have a losing trade and they hang on to it in the hope that it's going to come back to break even, or it's suddenly going to come into profit. And as soon as it gets into profit, they close it, even though the market's now telling them that they're right. It's a mind game, trading, ladies and gentlemen. It's a mind game, and that's what you get right first, I'm afraid. And many people don't, unfortunately. But anyway, where have I gone? There we are. Upside down, head and shoulders. Maybe. I'm not a big head and shoulders trader. I know I should be. I know it's a very effective pattern, but it's not something that jumps to me. I stick to my moving averages. But yeah, Neil, are you talking about what are you talking about? Where's Neil gone again? I remember you asked me something, didn't you? Sorry, Neil. We still talking about gold. Again, it depends on the time frame. Neil, where's Neil gone? I see a comment now. Head and shoulders handle, yeah, 4 candles. Okay, right, I got you now. I'm with you now. Sorry, Neo. I'm with you now. Possibly. Possibly. Victor, I need to learn it. Well, we're here to help, Victor. Go to our website, click on the education tab. Let me show you. Can you see that? Yeah, there's our traders board. Our education tool here, there's videos, there's e-courses, there's webinars. Obviously, come and see us face-to-face. How to get started. Our written analysis, our written technical analysis, that's all there. Podcasts, earnings calendars. There's past webinars to learn. There's depends where you are in the world. We do our webinars 3 times a week in English. We're running a series of webinars every day, Monday through to Friday for our African clients, run principally in English, but also in Arabic for North African clients. Again, that's like a course you can walk through. So I don't know where you are, Victor, but check our websites out for that. Obviously, we've got offices around the world. We're regulated in South Africa, we're regulated in Kenya as well. Come to our offices in Nairobi and Johannesburg. The guys are there to help. The team trainers are there to help. So, it's all about education, but principally, the most important thing, though, yes, you can learn to do technical analysis, and yes, you can learn about economic news flow and all that sort of good stuff, and what's yields and why is it important and all that sort of good stuff. But as I said before, the principle of good trading is understanding yourself, and that's something you can practice on all the time. We're always improving. Rio. I'm new to new trading, watching from Kenya. Good afternoon, Kenya. If you're in Nairobi, get into the office, Rio. Come and see the guys. Dennis is our analyst in the office in Nairobi, in Westlands. Come and see us. If not, I say register. If you're in Kenya, Rio, you're not in Nairobi. It's another huge country, beautiful country, from the coast up to the highlands, and obviously the wildlife. Do log on for those webinars, Mondays through to Fridays every day, and you can learn online. And then if you can get yourself to Nairobi, come see Dennis as well. So best of luck. Sildon, good afternoon. Mohammed, we had this conversation, didn't we, a few weeks ago, and you were talking about this 2150. Well, I wouldn't rule it out now, would we? 1950 struggling so far today, but it's not that far a reach now, is it? 21. That 2150, obviously, it's off this chart at the moment on this one-day chart. But if this uncertainty continues in the banking sector, and the markets are still spooked and don't believe the noise is coming out of the central banks and the governments. But I mean, people saying it's not 2008. It certainly isn't 2000. It's not the systemic financial crisis of 2008. And yes, Credit Suisse has had problems for many years, and it's just been accelerated by the collapse of these California-based and the First Republic banks in the US. And there again, had a very strange setup with what appeared to be very safe assets based on long-term treasuries, but as the cost of the price of the treasuries have collapsed and yields have risen, that's put a hole in the balance sheet of SVB, and they tried to raise, quite casually on the Wednesday, tried to raise extra stock, a $1.8 billion stock, new stock purchase. But their big investors had got twitchy, and people like Peter Thiel in particular had been withdrawing his investment and advising his clients to withdraw investment. I think I was reading today he'd lost 300 million in the collapse of SVB. So yeah, all of that, if that continues, and as we've been saying all week, there's never only one cockroach. It's a horrible phrase, but if you live in a hot country, you'll know what I mean. You never only see one little cockroach here. There's always thousands of them, if not hundreds of them. So not that hundreds of banks are going to go bust, but we've had 2 or 3, maybe 4 or 5 before this is finished. Credit Suisse could be quite systemic. These regional banks in America are not. Obviously, that then raises the question about similar sized banks, similar capitalization on banks in other parts of the world, Latin America, Asia, Southeast Asia, question mark, developing economies, developing markets. And it's just on that, not that Cyprus is a developing economy, but it's an advanced economy, but it's 10 years ago today since Cypriot banks were closing their ATMs. People couldn't get their money out, and the second biggest bank in Cyprus went bust. So yeah, things do happen, and history can repeat itself. So at the moment, gold is bid. To get back to your question, Mohammed, and 2150 is off my chart here at the moment, but it's not beyond the wit of man, as you say. Let me just put it on there. 2150. There it is, all the way up there now. That's a huge move from where we are. But we talked about this a few weeks ago, didn't we? And it seemed very unrealistic. But here, the daily, it's been a strong week for gold, and it's been a massive week. Here's the weekly candle. Obviously, that's not closed yet. The daily candle, strong day today. Again, that's not closed, but we breached at the key 1950 level. So yeah, onward and upward so far. But remember, it's rallied very quickly. It could turn around very quickly as well. So always manage your risk. Don't get too greedy. Don't get too scared. May you please explain your moving average on the chart for Signal? Sikweeby, on this particular chart, the only moving average I've got on here is this one here, the green one. This is a 21 exponential moving average because this setup is designed to trade the template. If I look at if I show you the template, of course, there it is. There, it's called the opening hour template, and it's basically green candles are positive, red candles are negative. It's got the 21 EMA. It shows you the volume, and I've got a stochastic at the bottom there. I can't if I hide. The stochastic is set at 1063. So if we look at the settings for properties of the stochastic, you should be able to. I'll bring it onto the screen now. So the percentage K is 10, percentage D is 6, and the slow is 3. So it's 1063. The thing with stochastics, obviously you get that peak and trough, so you get a lot of false signals. This is the overbought zone. This is the oversold zone at 80 and 20, as I've got it set on here. That's the default setting again. So you set your levels here. That's the default 80 and 20. You can play with it if you want. I don't see the point, to be honest. Obviously, you can play with the numbers as well, but that's the setting. This is an overbought situation, but as you can see, although it's overbought all that time there, you see that? Because it's in the overbought zone, the trend overran the oscillator. So it was going down and going down, but it couldn't actually break down. It was only when it broke out here. And again, the trend was strong here. See how it's broken out of the overbought area? That's when you're looking to go short. But you've got short there, and then you've got that little move down there. But, it moved down, but here the trend was strong. It held it, broke it, and then sideways. So the oscillator then becomes more relevant here when the moving averages are flattened out. So here we'd have gone short there, but it's gone against us, so you might have been stopped out. But certainly, as it's moved down there, has worked, and then we've gone long there. Yeah, it's not great. That's messy yet because the trend is building. The sideways action is building up, and then again another strong trend and negating the oscillator. So it's counterproductive. So Ahmed, I've got the answer. Well done. Yeah, it's a hammer at the top of the top of that. Well done, my friend. No wonder you're smiling. Ahmed, it's a hammer indeed. I can't remember what chart it was now. It was the 500, wasn't it? S&P 500. Was it the S&P 500? Or was it NASDAQ? I can't remember. What was it? Can't have been on the 5 minutes. Was it on the 1 hour? I've forgotten what chart it was. But yes, it was. It was a hammer or hanging man because it was at the top of a trend, wasn't it? Very good. Okay. Where did I get to? 20. Who's that? Who's the last question that was on? 21.50 for gold. Yes, we had Mohammed on, didn't we? Sorry. You explain your moving average on the chart for Signal. Yeah, I taught Signal, but it's basically the 21 EMA. So if I'd look to take long positions as long as we're above it, and short positions as long as we're under it. But you can see that was moving up this again. 5 minute. Again, it's all about the time frame and the relevance of it. Here on the 1 hour time frame, I like to default. It's been strong yesterday. It rolled into this particular. There's that 4,000 level we were talking about earlier. It's rolled into 4,000. It doesn't want to go over it, and it's gone down. And currently, it doesn't want to below this 3,950 level. I haven't got the support, but 3,950 is a key support level. And again, you'd look today, you'd see, well, that candle there at 3,948 is sort of just above 3,943. So there's a bit of like a little support area there. And the next level down takes us down to here at 3,930. These cut through here, and that takes us through. So 3,930 is quite key. And then obviously 3,9, the round number itself, is all the way down here. The bottom of this big rally to the upside. So yeah, it's horses for courses. Slivden. How do I trade? Because I'm often at work, I often lose. Well, if you're at work, you need to, I can't tell you, I'm not allowed to tell you what to do. If you're a working person, if you work, I don't know where you are in the world as well, you need to perhaps look at the end of day candles. So that's what we just talked about. That's the story of the 1 hour candle for the S&P 500. What's it saying on the end of day basis? Well, on an end of day basis, as of yesterday, we'd had quite a strong uptrend, but it's only just broken over the 21 EMA, hasn't it? And we've been under it for most of the certainly the second half of February and most of March so far. So the bias here on this time frame is to the downside. So as an end of day trade, if you came into to look at this candle as you got back in from work yesterday, that was quite positive. But would it be enough to take a long position? Probably not. You'd want it to break and hold over the 4,000 level. Do you see the 4,000? It's 4,009. So you'd like to see a nice update today. What might happen today? Well, we don't know what's going to happen today, but you come back from work today, you might want to think, well, actually, it's tried to break over it here and it formed a nice candle pattern again there, the wick rejecting highs. So the trend is back to that. So I might want to take a short position at the end of today. Obviously, the problem with turning it today is it's a Friday. So nothing happens over the weekend. We charge swaps, obviously, for the weekend. But yeah, that's still looking a bit miz. But there's obviously a big support around this 3,850 level, and above that the 3,880 level. So it all depends on the time frame. Lots of people at work, Sleeveden, like the 4 hour time frame because it means they can sort of check it either like before they go to work and during the day. So have a look at the 4 hour time frame as well, but apply the rules and regulations, the rules and your system to whatever time frame you're trading. So here it's been short, but the 4 hour time frame is looking okay. Again, I don't know if you'd got in here on this break up here, it's still been long. It's come down the last two candles, but you'd have to see. You might want to get out there for a small gain if you've only got in there, or you might have already got to your target as it's got to the big 4,000 level if you'd got in there. So that's sort of biased to the upside at the moment. So interestingly, the daily is still down. The 4 hour has tweaked up, and the 1 hour has generally tweaked up, but it's broken down now. So it's mixed news coming out of that. So the 1 hour looks like it's gone short in the last couple of hours. The 4 hour remains long but rolled over and has rejected the 4,000 level. And the daily had a good up day yesterday from a very crazy week. But looks like it's having a down day today. So it's all about time frames. Ali, we looked at gold before. Certainly have a look at it again if you like. See if anything's changed. I don't think it will have done. We're still bid. There we are. And we've gone even higher. So there's our 19. This is the 5-minute chart again, remember though, guys. There's our 1950. So here we are. Some 400 points above that at 1945.20 at the moment. So 0.22% above the key 1950. So again, remains bid. So my stop loss will probably be just around there now as a 5-minute trader. But I might want to pull it under that. I'll just have it at the 21. The other way, you could have it here at the 21 moving average. That sits you there at 1948. Nice. Obviously going to give quite a bit away if it comes back all this way back down there, but that's where my stop loss would be sort of. If I want to be a bit more aggressive, I might have had it just below the 1950 round number, but that's continuing to bid. Thanks very much. I'll just get rid of that. Last line I put in. Okay, let me just... So it's on 1950. Okay, volume's quite nice. Stochastics still in that overbought area, but it's not turning down, so we're still bid on gold. Ali, my friend, something different. The Dale, thank you. The Landa, sorry. Euro yen. This is looking quite perky and long. Let me open it. File, new chart, forex, euro, yen. Let's put the same template on. What are we doing? We're using the opening hour template. So again, I don't know what time frame, but on the daily time frame, this is looking quite strong towards the end of February as we got to 145. There's 145 is there. Let me just put that. And the logic was, the Bank of Japan weren't going to change anything. The new governors coming in, they still remain ultra conservative, ultra loose. ECB had already said they were going to go 50 basis points for March. They did, and they did yesterday, obviously. And so it looked like we were moving higher through 145. Next target would have taken us to 146 something, 146.23, and then the trend had just kept going higher, 147.40, these highs back into October last year. So that didn't happen. It found resistance at 145, and it's tanked quite significantly since then. So that long uptrend was stopped out here, middle of March, and it's looking to move down. We're at 140.40 at the moment on this end of day level, which is actually a key sort of support level here. It takes us back to this early part of March, takes us back to this end of December, so into last year. So the downside is that level, then that level there at 138.92, and then the lows for 2023 come around there at 139.20. So that's our down legs for euro yen. Again, I don't know what time frame you're trading this on. But that's the downside on the daily time frame. If we look at the 1 hour time frame, there's our first level. Our second level is obviously quite a long way away, but we're spiking into that zone yesterday and on Wednesday. So again, down there. The 4 hour is also down. Big down count. So I don't know which way you're trading this or what time frame you're trading it. But if we go down to the instant time frames, again, even on the 5-minute time frame today, it's been relatively short and some big moves down, hasn't it, today? Big rally up as well, sideways then. But again, that's turned lower in the last 20 minutes on some good volume. The opening candle, not that it affects Forex too much, but it's still a significant one, was a down candle, having rallied ahead of the open. And there's that low, that 140.22. Remember, that was that first down level. So we've hit it there on that 5-minute, and it's looking like we're going back to it now at 140.21. So certainly that's short for the on that on that 5-minute time frame. Ali has saying, see gold support. There's no gold support. There's gold resistance at 19. There was gold resistance at 1950, but that's your support. And there we've legged higher again, and we're going to that 19 next level. This 1959.68, and that was just shy of 1960. If we go to the daily time frame, you see that was that intraday high. See that where we are now? We're at that intraday high from the beginning of February, when we had those two huge down days. This is a daily candle for gold, remember. So those two big down days that triggered the big rally down in gold for February. We are now back to it, testing it. This 1959.68 or 1960 is the next, obviously, big line in the sand to the upside. So it's breached that first resistance at 1950. We're now at the next key level and testing it now intraday with his. This is getting pushed high now on his 5-minute candle. We've just the US data is out at top of the shop as well. So the euro's clearly weakening. The dollar's clearly weakening as this gold market rallies. I would argue. We haven't actually looked at the euro, the dollar, have we? Jeffrey, resistance for gold. Where is the possible retest? Well, 1960 now is the next, obviously, round number. But as I've just shown you, go back to the daily time frame, zoom this up. You can see there's that spike higher, which is where we are now. So right where we are now, 1959.70, that intraday high from the beginning of February is being tested right now. But look at the again. This is daily candles, and look at the size of this at the moment. There's no wick. This is a Mazubu candle at the moment, but we can't yet make a decision on it because it's obviously not closed. We'd had 3 big up candles, 2 certainly huge candles earlier this week. Then a lot of indecision on Wednesday, but still a big positive candle. More indecision yesterday, bit of a doji candle, and then we gapped it open again today, and we've moved higher. Gold is bid into the end of Friday. The worry about the banks continues to give gold a lift, and our guess treasuries are getting a lift as well. So that's that's what I've just said, Ali. That is that resistance 1959.68 is where the resistance is. Emily, good afternoon. I hope you've found some joy in our webinars, and welcome today. Is there anything you want to have a look at today? Let me know. Jeffrey, of course we have free classes. Everything's free. We don't charge you for anything, Jeffrey. Jeffrey, where are you? If you're in Nigeria, if you're in Lagos or Abuja, come to the office. If you're in Nairobi in Kenya, come to the office. If you're in, can get to Johannesburg in South Africa, come to the office. There are big African centres. If not, obviously, wherever you are else in the world or else within the country, join our online webinars. They're all free. There's nothing, we don't charge you for anything, my friend. Education is key because we want you to succeed. I know many people don't believe when I say that, but we do because, successful traders bring in more successful traders, and we grow on the back of that as well. So we're here to help. That's why we do these sort of things. Okay, so everything's free, Jeffrey, my friend. Good afternoon. Senzo from South Africa. Please, what's your view? Doesn't matter what my view is. D9 Dynasty. Please, what's your view on the S&P 500? In what time frame? What's my view on the S&P 500? Well, let's have a look. It will depend on the time frame. Have I got on this? Why haven't I got on this? There it is. So the immediate view here on the 5 minute and 1 minute is I'm short. I had a nice tweezer top there that didn't work out. Went short and reversed on me. Looked like we were going long here at 1600 38 minutes ago. But again, tweezer top, and that reversed quite aggressively. That was still okay because it closed out, and then I would have gone short there because my long position hasn't worked out here on this 5 minute time frame. Just using the price action, I'd have gone short there at 3973.70, and I'm still short. My stop loss now is here, so I've definitely made that amount. We've broken below this low, which is also quite interesting. That's another key level. So we could reverse to test it. Clearly, this is only 5 minutes, so we're likely to come back to test this level there, 3956. But I'm short. That big up candle there hasn't played out. Big volume, big up candle there at 6 o'clock has been reversed and turned around. I've gone short there, so I was long here, got stopped out. Perhaps got long there, got stopped out again. So 2 losing trades there, but now short and very much in the money and very much recouping those 2 failed long trades. But equally, I'd been short from or would have been short from this sort of level here. Entered again there. I might have entered again there. Retraced, obviously short because the 21 has kept me the right side and got out. So that long, this big downtrend here. Thanks very much. I've got lots of pips on offer there, and I'm in the money at the moment as we're moving lower. So we're trading at 3953 or 3954, and it's short. That's my view there on that 5 minute time frame. Let's just take that. But if we go up to the daily time frame, it's a bit different. It looked like, as I've just said before, it looked like a big strong day yesterday, but a weak day today. So can't decide on that till the end of the day. The hourly candle again went short at 1500 hours, having rallied up and rallied into 4,000. We can't break it. Profit taken from this move up. Thanks very much. And now I'm short. And my stop loss, if I was short here at And the close, actually, on the close of that candle, my stop loss would have been up there. My stop loss now is round about, probably still above that spike there at 399. So I'm not in the money on that 1 hour candle. 4 hour, still longish, I would guess. Looks like that's getting stopped out though. It's reversing. So it's all about time frames, my friend. So that's what matters. Dollar yen for Femi. Where are we? It's 16:41. I'm going to go home soon. My voice is going as well. So let's. How many more questions have we got there? I've got a few on me. I'll keep going until you keep asking questions. Emma has got some good questions by the looks of things. Oh no, God, there's quite a lot of you. Sorry, Emma. I will get to you, Emma. Don't worry. I've forgotten where I am now with Femi. Where's Femi gone? Femi's here. Femi's asking about dollar yen. Let's have a look. Again, time frame, my friend. File, new chart, Forex, dollar yen. I think it's opening this setup at the moment. Current template. Well, that's short, isn't it? That's a 1 hour time frame. It's short, retrace, short, and it's still short now. So it's moving lower there on that 1 hour time frame. 131.87 on the 1 hour time frame. 133 was key today. That's where we were this morning. I remember talking about that with the guys on the floor this morning. 133. There's our pivot area yesterday. We went into it. So we're under that. And look what's happening now. That's our low from earlier in the week on Monday, Tuesday, Wednesday. Our low was here. Thursday, our low was even here. And Friday, we're testing those lows now. So 131.50 is the next support area because that's where we went down to earlier in the week. There's 131.60. That's the low from yesterday. Was 131.70, so it was higher than that. I thought it was lower than that, but there we go. 131.70, and we're within a smidge of that at the moment. We're in 30 pips of that at 131.90. So again, that's broken lower in the last hour, having been sort of sideways for most of the day. So that's short as well. The 4 hour remains short as well. See how the 21's worked out perfectly there. Kept support, kept you short, resistance short. So 4 hours short. The daily triggered lower here earlier this week, and we're moving lower. So here on the daily, you can see we would as we in the middle of January. So the 2023 low has taken us to 127.40. On an end of day basis is 127.70. Well, away from that at the moment. Obviously, the next support zone, if you again look to the left, see this big up candle here at the beginning of February. So that came through round about there. So 130.95. So for me, that's 131. So 131, the next big round number. We're trading at 131.70 is the next big support area. You can see that? There, I'll put that on in a thicker line for you. Indicator list. Whoops, indicator list. Object list, isn't it? So I'll just make that a full line. Make it a bit. Actually, I won't make it thicker because it's 131. 131. Next key support area. Only 70 pips away from that at the moment. On an end, but this again, remember that's an end of day basis. We're here at 131.70. So big downside. Femi down on the daily, down on the 4 hour, down on the 1 hour, retrace, and then down again today on the 1 hour. 131.70. That low we spiked yesterday, possibly tested as we trade at 131.84 at the moment. We've got key US data in 15 minutes as well. So all these short time frames, remember, influenced by or potentially influenced by the data. Obviously, yesterday was a big day with the ECB, but significant. It came out 4 o'clock. I've got my times wrong. That's why we've had that movement at 4 o'clock. Of course. So it's a miss for consumer sentiment. The Michigan or the University of Michigan consumer sentiment is a key measure of how the consumer feels. It's as it suggests, it's a sentiment indicator. It's not an actual hard, it was a hard piece of data, but it's more to do with how the consumer feels. And remember, the consumer in the US accounts for 2/3 of the GDP. 2/3 of the economy is driven by the consumer spending money, investing in stuff, basically. And at the moment, it's missed. The view is weakening. So that explains that 4 o'clock move that I thought was happening at 5 o'clock my time. So there we go. I've been caught up by the time frame. So hence that move down, I would guess, here for dollar yen at it's at 3 o'clock. That's the 4 o'clock candle there, and it's just come out. That's why it's gap down there at 4 o'clock. So it explains that gap, and that will explain the gap on the sterling chart that I didn't put 2 and 2 together for earlier. So there we go. We're lower for dollar yen as well. 131.86, 131.70 was yesterday's low. Are we going to get there? We shall see. Dollar yen. Margot, no problem, my friend. Rashid, very good. Which EMA is that? This green one, Rashid and everybody else, is the 21 EMA, guys. Okay. There it is. 21 EMA. It's a lime green line on the white chart there. So it's the exponential moving average because I'm using it on an intraday basis. I would tend to use the simple when I'm on daily or above, but the difference is somewhat negligible higher the time frame. But exponential 21 EMA, my default moving average. And remember, moving averages are great if they've got an angle on them. If they're flat doing this, they're not so good. You want a nice angle, which you've got an angle forming now on that big down candle there. Obviously, they have problems. They're lagging. A lot of people don't like them, but I've always used them. They work for me, and they can work for you as well. But just because they work for me doesn't mean they're going to work for you. Okay, remember that as well, guys. It's all in here. It's all how you approach it. What's holding my account not to open it? I don't understand, Kingsley. You're saying you've tried to open an account and you can't open it? Kingsley, come onto the website and live chat should be available. There should be somebody available, live chat. If not, email support@hfm.com. The guys are really, really good. They'll sort you out, okay? I don't know. Oh, are you trying to say what's holding up your account from opening? I think that's what you're saying, aren't you? Can you check it for me? I can't at the moment, Kingsley, but I don't know. I presume that is Kingsley Emperor your full name. I could find it, but email support, SUPPORT, support@hfm.com. They've probably sent you a few emails. It's not. Make sure you've done everything they've asked you to do. Otherwise, come on to hfm.com and the live chat box should pop up. I'm not sure I'm saying it should. Anyway, if it's not there, sorry. Email support@hfm.com and I should get back to you explaining what to do. There's usually, it might be I don't know what regulation you're in. It might be some document you haven't sent or you haven't uploaded correctly or they haven't yet processed them. But normally, account opening happens very, very quickly. Emma, good afternoon. Do you see the banking issue creeping into GDP figures in the medium to long term and thus affecting the FX market? That's a very grown-up question, Emma Mack. Thank you very much. Absolutely. Markets, Emma Moo, are driven by sentiment and expectations. And what happened, a Wednesday before last when Peter Thiel and others started to pull their money and suggest their clients pull their money out of the Silicon Valley Bank, triggered what's going on now. It's pushed into Europe with the Credit Suisse situation, but Credit Suisse was, had been under question marks for a long, long time. They've lost lots of CEOs, have been caught up in lots of scandals, had a huge fine. They were caught in the Greensill affair, all sorts of bad press for Credit Suisse. And banks, particularly the Swiss banks, they rely on confidence, they rely on reputation. When that gets hammered or hurt, it's very, very difficult to get that back. Their deposits and their economic performance is sometimes secondary to how they're perceived and how they're viewed. which really is why we had, yesterday we had, Jamie Dimon, the leader of the biggest bank in the US, leading the recovery of the First Republic FRC with this $30 billion bailout yesterday. So yes, the longer it goes on, Emma, yes, the longer. And as I said earlier, you very rarely see one cockroach. So yes, it could have a knock-on effect for GDP as we move forward. But at the moment, the flip side of the coin, the good side of the coin, is the regulators acted very quickly. The President Biden, came out very quickly, didn't he? They liquidated Signature Bank, they liquidated FM, Silicon Valley. They supported the depositors. It wasn't only the 250,000; it was every depositor was supported. The downside of that is, well, does that mean all the other banks that aren't quite safe or a bit dodgy or could get pressured with these market moves, are they going to get bailed out? They haven't actually used the word bailout, but they don't like using that in central bank speak. But are they going to get bailed out as this situation, if this situation unwinds? At the moment, it seems relatively contained, but it's been very volatile. And before I came on air, FRC was under, it's down another 20% today. So certainly. Kingsley, I hope I am trading here in Nigeria. I really don't understand how to get my profit or loss. Kingsley, that's the basics of trading. I don't know where you are in Nigeria, Kingsley, but we got the team in Nigeria is led by Abiola. He's a great guy. He's got two really, really good trainers that are working for him currently. So again, if you can get to the office in Abuja, you can get to the office in the education centre in Lagos, do so. If not, join the guys online. They're always doing online webinars, online training, Kingsley. So check out the local team there as well. Kingsley, I can't back down. Please help me out. I don't understand what you mean, Kingsley. What do you mean? What can't you back down? X1 Bet Tutores, that's a great handle. Does gold, will it reach 1960? Well, I think it has, hasn't it? Whilst we've been on air, as they say, on all best TV programs. There we are, 19. Oh, you can't see. What am I talking about? Let's get rid of me. Sorry, you can't see. There we are, 1963. It already has X1 Bet. I hope you got long. I hope you're in that, you saw that trend there. I am. There's my 5-minute chart. I'm happy, Harry. It's a bit stretched now, guys. My stochastic is all the way up there at 92. Remember, it can only go to 100. 94.5. It's getting a bit stretched down at 5-minute. But at the moment, thanks very much. My stop loss at the moment would be getting dragged up as this has continued to unwind. We're at 94.58 now. I might bring it up a bit more to lock in some more profit. But we are getting a bit stretched. But the trend is running. Don't fight it. We've broken 1960. There's that gold. Good evening. From Philippines. Good evening from the Philippines. Nobody's mentioned cryptos because it's late in the evening on a Friday night, and so nobody trades. That's an in-joke. Anyway, good afternoon, Victor. Hope you're well. Gold, please. Thanks. Well, we said that earlier, didn't we? The resistance was this one here, 59.68, which was this. We got to the daily time frame again. This was that intraday high we'd gone to at the beginning of February when we were in a big remember we were in a big long uptrend, and that was that day there when it collapsed from that 1959.60 was a big indicator that big down candle engulfing all that previous action. That was, if you closed your long, certainly on the end of that day, if you hadn't done it before that, and then certainly went short then, and it's rallied all the way down. Thanks very much. You love trends when they're like that, don't you? You don't like it when they don't work out. But, it's a good week for gold bulls. Keep going, my friends. By the looks of things. 1963. We are already above 1961. So there we are. Hang on a minute. I've gone backwards too far. Emma, further to your question, you've added to it. Do you see the bank? Yes, I did say it, due to banks tightening lending and base rate increase. Absolutely. It's a great question. But yes, well, you're obviously well thought out. You obviously know what you're talking about, Emma. Nice to speak to somebody like yourself. But yes, absolutely. That's the issue. banks will look internally first about what's our deposit situation like. How well liquid, how well capitalized are we? Obviously, the regulators in the US will be looking to perhaps crank up some of the regulation, some of the capitalization of some of these midterm banks. But there's a whole broad host of these mid-sized ones that were down significantly before the market opened earlier. And I'm just having a look at the boards at the moment. Credit Suisse is down 10.5% today. We're just looking at euro into the euro close. So Credit Suisse, that could be quite problematic if Credit Suisse goes. But anyway, that's a story for next week and another day. Kingsley, hello. Jeffrey, you're in the Philippines. Well, I hope you're staying safe, Jeffrey, and have a fantastic Friday evening and a fantastic weekend. Victor, hello, my friend. I said, if you're in Lagos or the Abuja, get into the offices, go and see the guys. We're here to help. But if not, get online, and there's lots and lots of online help for you. Kingsley, this is all about trade with your data and getting paid if you trade well, right? Yes. Sorry, Kingsley, have you just... It's hard to understand. I learned. Well, thanks. Yeah, Kingsley, anybody can learn to trade, my friend. It's not about sort of education or level of education or, being an economist or a banker or anything like that. Success in trading or in investing, in my humble opinion, is, about yourself. So, do what you understand. I know a lot of colleagues and friends in South Africa know that trade gold because they know the gold market. Gold mines were very significant to the development of South Africa, and it's still a significant part of the economy. So they understand the business. They understand the graft that's involved in getting gold out of the ground and processing and all that sort of stuff, and who controls that sort of market. So trade what you know. If you're in a particular industry, have a look at the companies around you. Have a look at your own company. It's all about that. So yes, and like I say, have a system. So this is, it's very simple. This one, isn't it? This green line, we're above it, so we're looking to go short. Long here, we're under it, so we're looking to go short. It's not always that simple, obviously. Sometimes it messes about with it. It goes above it, then it goes below it, then it goes above it, then it goes. But the size of the candle matters always. Two big down candles, and it went down all that way. Then it's started to go up. It hasn't a big up candle, another big up candle, a big gap, and now it's continued up a few days later as well. So hope that's helped you, Kingsley. Kingsley, is Kingsley in? Yeah, Kingsley. Okay, I'm watching on YouTube. Yep, good. We're on all our social platforms. Right, I'm going to wrap up, guys. It's 10 to 5 here in sunny Cyprus, and the weekend is calling. It's St. Patrick's Day, so I need to go and celebrate with a pint of Guinness, I think, to end the week. I hope you are all well. Stay safe, trade carefully, and always remember, keep your losing trade small. We all lose in trading. We lose more often than we think we're going to when we start, but stay safe, and we'll see you all next week. Big week next week as well. The Fed, Bank of England, Swiss National Bank, and kick off the week, the Chinese Central Bank. So lots of potential opportunities, lots of potential pitfalls. Keep your losing trade small, everyone. Take care. Goodbye. See you next week.